Welcome to the Steady Wealth Builder. This video is a beginner's guide to removing the anxiety from the stock market and investing with confidence using the power of dollar cost averaging. The biggest trap for new investors is attempting to perfectly time the market. Waiting for the perfect dip or fearing a crash lets emotion drive our decisions. Even Wall Street professionals consistently fail to time the market perfectly. Meet the cruise control of investing, dollar cost averaging, or DCA. This is the strategy of investing a fixed amount of money at regular intervals, regardless of what the stock market is doing. It ignores short-term volatility. The rule of routine is simple: set it and forget it. Instead of saving a lump sum, DCA breaks your investment into bite-sized, automated chunks. You pick an amount and a rigid schedule, then buy automatically, rain or shine. This is the grocery store secret. When you commit a fixed dollar amount, the math works in your favor. You automatically buy fewer shares when they are expensive and scoop up more shares when they are on sale. The discount comes to you. Let's see the math in action with Jordan, who starts using DCA. Every 2 weeks, $50 is automatically invested into an S&P 500 index fund. An index fund is a single investment that buys a tiny piece of hundreds of top companies at once. Over 10 pay periods, Jordan invests $500, completely ignoring the wild price swings. Notice how the fixed investment buys fewer shares at stock peaks, but a lot more shares when the stock drops. The math proves that consistency beats perfect timing. The Steady Builder using DCA acquired more shares at a lower average cost than the market timer, who bought a lump sum, all with zero stress. DCA is a psychology hack, not just a math trick. The greatest threat to your wealth is human emotion. DCA forces you to use logic and system, preventing you from panic selling out of fear or buying heavily out of greed. Is dollar cost averaging right for your portfolio? It's perfect if you are a beginner, want to build long-term wealth, or get anxious from financial news. You might skip it if you are an advanced day trader. The golden rule: buy baskets, not individual eggs. DCA works well when the asset fluctuates but trends upward. Always pair DCA with highly diversified index funds, or ETFs, so you are betting on the whole economy, not just one company. Plot twist: you might already be doing this. If you have a 401k plan at work, where a percentage of your paycheck is automatically invested every period, you are already using dollar cost averaging. Replicate this in your personal accounts. Here are 3 steps to start your DCA engine today. First, pick your number, an amount that won't stress your budget. Second, pick a broad fund like an S&P 500 index fund. Third, automate it in your brokerage app. Consistency is greater than timing. DCA accepts that the market is unpredictable, allowing you to control your habits instead of the market. It transforms time and consistency into your greatest financial assets over years and decades. Start small, automate your success, and ignore the noise. Set up your first recurring investment this week and let the math do the heavy lifting to build your wealth steadily.